Good morning. This is Chris Robinson, Rob Tag Marketing with today's pre-opening grain and livestock comments for Thursday, March 26, 2026. 326.26. All right. Stock market's about 300 lower. Crude oil about $3 higher. Traded at 93. Almost took out 95. Traded at 94.85. Again, this is just all about the headlines and what's going on in Iran, and that could change tomorrow. Um, at the end of the day, we want to not be caught holding the bag when and if this crude oil situation breaks. If that happens, I think a lot of people are going to wish that they had some cheap, shorter dated puts on. You don't have to spend a lot of money to defend what has been a very good rally. We had December corn hit 495 last night, trading at 493 and a half. I'm old enough to remember in December when we were down at 445, people were worried about $4 corn holding. So regardless of the reason why we're here, please take advantage of it. Um, I'm not saying we can't go higher. I don't know if we're going to have a drought this year or not, but a 50-cent rally, basically just because of crude oil, it's a bad reason for a rally, but boy, you better use it, in my opinion. New crop beans back to 11.52. Same idea. We had only a 3-cent range in beans last night, a 9-cent range in May beans, right? What do we know? Well, we do know that the funds are all long corn, wheat, and beans now. They're probably long. They might not be long Chicago wheat, but they're long Kansas City, Minneapolis for sure. We'll get the commitment to trader update tomorrow, Friday. But again, we're in a good situation for a bad reason. So, and if you don't use it, 3 months from now, if we're sharply lower, I don't want to be hearing guys lamenting, saying, "Oh, Mr. Market got me again," or "They got me again," like, whatever. No, you've got an opportunity to do something here. Take advantage of it. You don't have to go bananas, but you absolutely positively, can get some very cheap options on here, even for the next 30 days. You don't have to spend a lot. It's in 7 or 8 cents to defend corn. You can spend um, my goodness, if you just wanted to protect $11 beans for the next month, it's 4 cents. Now, granted, we're at 11.50, so if you wanted a little higher, you go up to like an 11.30. But even that's 7 or 8 cents. So gone are the days where guys are like, these options are too expensive. Yeah, I get it. The person that is going to sell you the option is going to collect money on the premium. That's just part of the way the business works. If you can't stand the fact that someone's on the other side of the trade, you're missing the whole point of the trade. The point of the trade is for you to lay your risk off on somebody else. The point of the trade is not for you to make money on the hedge. You want to make money in the cash market. So a lot of farmers need to wrap their head around that because the desire to make money both ways. You want to sell the high in the futures, and you also want to make money on your puts. Those two are incongruent, right? I hate to tell you. Also, in my letter yesterday, I pointed out that who am I to say that we don't have a drought this year? I have no idea. I've been doing this for 32 years. It's hot and dry. There's a ridge out there now. Or, come June or July, are we going to be talking about a drought? I don't know. But guess what? You don't have to spend a whole lot of money even right now to go out and get protection against, a July rally. My goodness, you can go out and spend a dime or 10 to 15 cents and protect yourself against that big what if. So don't be afraid to make cash sales because you think if you're going to sell into it, the market's going to rally. If you're selling into a 50-cent corn rally, hold back 10 cents for a call option if it makes you feel better. If you're selling into a $1.25 soybean rally, hold back 15 cents and re-own it for the next 3 months if it makes you feel better. But as a farmer or producer, especially in 2026, when several months ago people were, very, very depressed and very, very angry and very, very um, angry. Yeah, I said that before. Don't let this rally go to waste. And I don't know who you're working with. If you're working with entity or not, you don't, uh, buying puts is not a strategy that's been recently invented, right? It's not like this is some unique strategy out there. You just need one thing. You need someone to help you make the decision. You need someone to help you manage the position once it's on the books. That's all you need. Hopefully it's me, but it can be anybody that has some experience in these markets. And if you don't know what you're doing, call a friend, call a banker, give me a call. But this is an opportunity I think that is worth taking advantage of. You don't want to miss it. Protein complex, we're going to be trading with the stock market again. Stock market, it's down 300 points. It's not that much. Again, a 1% move when we were at 46,000. A 1% move is 400 points, 460 points. So you can't get too incensed about that. We did have a 10% correction already last week in the Dow when we dipped low just for several moments. Then we recovered. The S&P did have about a 7% correction before it recovered. We have not taken out those weekly lows from last week yet. Looking at this chart, um, and again, so if we do, that's going to get the ball rolling for more selling pressure probably. Watch that about 64.83 in the S&Ps and the Dow. We traded it as low as I'll tell you here real quick so I don't misspeak. We traded as low as 45,453. So just call it 45,500. We're at 46,500 right now. So we're 1,000 points from last week's low, even though we're lower. And that is the lay of the land here. Again, crude oil is driving this thing right now. I'm looking at it. Crude oil is at 94 bucks. Have a good day, guys. Give me a call 312 638 8868. Take care.